everyone, and welcome back to FiscalVoyage. My name is Felix, and today's video we're going to cover about 6 different stocks on this video, but 4 in particular that I find to be undervalued and great buying opportunities. First, I want to cover 3 stocks that I've covered before in previous videos and where they are now. We're going to see how they performed, what did I say, and things like that, so you guys could have some confidence in the things that I'm saying. So let's cover those 3 stocks, and then we're going to cover some stocks that I've covered before but still present great buying opportunity in today's overvalued market. If you're new to the channel, make sure to hit that subscribe button. I like to talk about different investment ideas, dividend growth stocks, and in a few months I'm going to be covering some day trading because I'm going to be doing day trading. So I'm going to look at my my projected for day trading, so we'll see how that goes. But if you're new to the channel, make sure to hit the subscribe button, and also check out my free ebook in the description below on how to determine undervalued stocks. So let's get started with the video. Thank you. Alright guys, so first I want to cover 2 stocks that I've covered on November 16. You can see here a video that I created. The first one was on Merck, MRK. I recommended it as a buy at $81.09. And right now Merck is kind of flat since that video at $80.98. So it's slightly negative since then, but still great buying opportunity for that company. The next company that I covered in this day was, you can see here, we find it here, it was Intel. You can see here Intel Corp, November 13, and Intel right now, INTC, is at $56.66 compared to the at that time praise time was November 13. So November 13 was around $45. So you can see here it's up 24% since that video. And another video that I covered or created before was Simon Property Group here at $68. And here in this video on August 11, I was created a video called I Was Right About Simon's Property Group. And actually a subscriber asked a question, what was my price target? And we go down here, you can see here, let me see if I can find it here, what's your price target 5 months ago? And I said here, right now the price target is around $95, but I think you go even higher than that. That was 5 months ago. And if we go to SPG, you can see here $95.49. So this is the benefits of buying undervalued, high quality companies at a discount price. They pay out good dividends, growing dividends. Even though Simon Property did cut their dividends because of the economic shutdown and stuff, they have reinstated it, they're paying it back, and I expect them this year to announce some increase for that. So we're going to cover in this video 2 stocks or 3 stocks that are still good buying opportunity, even though that the market is at all-time highs. So let's go over some of them. So right now the first one is Northrop Grumman Corp, ticker symbol NOC. This stock looks to be undervalued based on the fast graph. Earnings are expected to grow 7% for fiscal year 2020 and 5% for 2021 and 11% for 2022. Based on the fast graph, it does look undervalued. The best buy opportunity, obviously, you can see here was around 2010, 2011, 2012 when it had a P around 8 or 7. But overall, you can see the tremendous earnings growth for the company. This year, you can see here right now it has a P around 13. The dividend yield is low, near 2%, but pretty decent with a good earnings yield of 7.65, BBB plus credit rating, decent long-term debt to cap ratio, and you can see here we could have a projected annual rate of return about 17.9%, higher than 15%, which is outstanding. So overall, Northrop Grumman Corp, outstanding stock. I personally own shares of this company, and this is great stock to buy more shares. And another one I like to talk about, and this one has been a little on a downtrend since I've covered it, but it still presents great buy opportunity. These basically, if you buy a stock at $50, you bought it because you liked it at $50. And if it goes to $40, you should even like it more because it's on sale. And when you first bought it, it should have been on sale as well. So this is just more on sale, more of a better discount. You can see here, if the company will revert back to the mean, you have a 23% annual rate of return for the next few years. Great annual projected rate. And you can see here in 2018, when it had a PE under 15, it bounced. And right now we have a PE of 13, under 14 PE. So I'm expecting a bounce anytime soon for this company, and then to rip up, to a PE around 17 or so, because that's where the average is. You can see here 17.4. Great dividend yield, over 3%, A- credit rating, investment grade. The long-term debt to cap is higher than Northrop Grumman, but still very manageable, high credit rating. You can see here earnings yield of 7.25. So overall, I like this company a lot. It is down since I last covered it. It's down maybe about $10. So it's about maybe 8%, 10% down, but still it just presents even better buying opportunity for this stock. Lockheed Martin, ticker symbol LMT. And the last one is Bristol Myers Squibb. This company has been kind of flat since I've been covering it, and because it's been flat, I've been buying it because the numbers are tremendous. It is slightly higher. I've been buying it around $60. Right now it's at 64, you can see here. But this is what I'm just waiting for their earnings release, because that's when the market sees the growth potential for this company, and it will should skyrocket the price. You can see here they're expected to grow 36% for 2020 and 17% for 2021. So tremendous earnings growth for the next few years. So this is what's going to drive the price. You can see here, if we shorten this time period and have it just a PE around what's that, 17, even a PE of 15, you can see here 52% annual rate of return for the next few years, with a nice 3% dividend yield, A+ credit rating, low long-term debt to cap ratio, 9.9 earnings yield, almost 10% earnings yield. Outstanding. So these three companies, Lockheed Martin, Bristol Myers, and Northrop Grumman, are all great buy opportunity now. And even Merck, MRK, the first one I've covered, it's been flat. It's a little lower than what I've covered previous video, but even that company. So these are four great undervalued dividend growth stocks right now that you could buy in this overvalued market. So those are the reasons why I like those four stocks. Intel right now, I give it as a hold. Is run up. It's up 20%, 25% since I covered. I'm not interested in it anymore, so I'm just going to continue holding my shares and collecting the dividends. But these other four stocks, Merck, Bristol Myers Squibb, Lockheed Martin, and Northrop Grumman, are all great buying opportunities at today's market. So thank you for watching, guys. If you enjoyed this video, make sure to hit that subscribe button, and also check out my free ebook in the description below. There you can find a spreadsheet on how to use the rule number 1 investing. Also, an ebook about 15 pages of how to value and look for undervalued companies in a quick, 5 to 8 minutes time frame. So make sure to check out those ebook. So I'll see you guys in the next video.